moving on to the fundamental side of things, what took place as we roll into the Asia session? XRP traded down into our overall area of interest at $1.34. So we'll go over that. We'll do a brief update on that PA, take a look at what took place there. And then NASDAQ over here surpassed our 27350 dark pool yet again and is on its way to the next level at the 27787, which we had identified weeks ago. Scalper gave us updates on these levels way before they came into fruition. So if we continue to see NASDAQ push into new all-time highs, that is going to be the next area of interest. We're going to be looking for some possible profit taking, for sellers to throw up some form of defense, especially if buyers can make a smooth transition above this high and start to inch and make our way up close towards those levels, right? So we're going to tap into that as well. On the fundamental backdrop, what took place today? Why are the markets still in crypto relatively holding on to gains? Meaning crypto did shed some weight after a slight profit taking at $2.6 trillion, but we haven't really broken previous bullish structure. So if you look at the daily right now, the only previous low that we've overcome for now is this last recent one. But the overall structure, in my opinion, on the daily still remains intact, as these big, massive bullish pushes have not been broken, and all of the lower highs within them have also still held weight. So we haven't seen bearish price action beneath these. If we start to, that'll open the door for a retracement back down to 2.31 trillion, which still puts us in this overall bullish territory of A to B, where we could still see accumulation at 2.3 and break higher. So right now, this is kind of my overall thesis in crypto, is that this is just some form of profit taking, sellers throwing up a defense. Crypto's still moving on the liquidity condition backdrop, and albeit I'll go over that in today's call. The Fed didn't necessarily support rate cuts. They didn't really push back on them extensively either. So we're still kind of in this no man's land with rate cuts. It was slightly supportive of rate cuts in Jerome Powell's comments, but the Feds voted against a rate cut. So we'll talk about that all today. All right, so jumping into today's report. Markets hold firm near highs as soft landing hopes, big tech strength, and Fed flexibility support risk into Asia. Rolling into the Asia session, NASDAQ continued to hold a firm bid near the 27350 dark pool, pressing above that liquidity region and remaining near record highs, even after a packed macro and earnings backdrop that could have easily unsettled sentiment. Instead, both equities and crypto largely held onto gains, which in itself says something important about underlying risk appetite. Despite higher oil prices, geopolitical uncertainty, and a Fed decision that was not outright dovish, markets interpreted the broader mix of information as supportive enough to keep buyers engaged rather than trigger aggressive de-risking. A major reason for that resilience was the way markets digested the FOMC outcome. On the surface, the meeting showed a split committee. There was one explicit dissent in favor of a 25 basis point cut, with Stephen Myron preferring immediate easing, while three dissents from Beth Hammack, Neil Kashkari, and Lori Logan came from the hawkish side, objecting not to hold rates steady, but to even retaining an easing bias in the statement. That structure matters. It was not a clean pivot towards cuts, nor was it a consensus turn toward renewed tightening. It showed division, but more importantly, it showed a Fed still operating around a broad center of gravity near neutrality. That nuance appears to be what markets focused on. The majority kept rates unchanged at 3.50 to 3.75%, but Powell's tone in the press conference did not come across, I repeat, did not come across as aggressively restrictive, which if you guys remember in previous Zoom calls, that was one of the primary focuses that I said today would be the focus, is what does Jerome Powell say? And can anybody on this call that has been tracking fundamentals and all the previous FOMC speeches with me together in this community, tell me the one word that you didn't hear Jerome Powell say 20,000 times today?
Certainty.
Uncertainty. He said that word maybe 2 or 3 times versus his previous calls. If you guys have paid attention, that man says the word uncertainty every 10 words. Today, he barely said the word uncertainty. He said it maybe a couple of times, but not as much as he definitely uses to. He usually does. So I said that that nuance appears to be what markets focused on. In fact, several of his comments lean supportive of risk assets. And here are all his comments. He said, no significant slowdown seen yet from gasoline price increase. People are still spending, right? That right there in itself shows that the economy is still performing well. If people are still spending, they're still out frivolously spending their money. They're buying things, they're buying up. It's again demand. There's demand in the market. People are spending money. The economy is pushing forward despite multiple shocks. So there's another comment. Remember, stock market likes to hear comments like that. NASDAQ likes to hear comments like that. If the economy is performing well, businesses usually tend to perform well. And what is the NASDAQ? It's a conglomerate. What is the S&P 500? It's a conglomerate of these large organizations. And when revenue is doing well, the economy is doing well. Tesla performs well, Apple performs well, Microsoft, Amazon, they perform, so on and so forth, right? Fed's pal said markets expected the Fed to achieve 2% inflation target. That's positive. So markets are still expecting the Fed to achieve their 2% goal. Trust in markets remains intact. That was a huge one. That is the complete opposite of uncertainty. Remember, I told you guys that if Powell delivers a certain environment and he says something that calms the market fears, that's going to be bullish, right? And there it is right there. Trust in the markets remains intact. That the Fed will shift into a tightening bias if rate hikes are needed. So that's something we'll talk about later on. Inflation is the issue that we need to address, of course. He mentioned that unemployment rate is near neutral level. This was an important one where he said, we expect tariff-driven inflation to ease this year for the decline to begin shortly. That was probably one of the most bullish ones because prior to this meeting, what have been one of the concerns? Inflation concerns. Does this sound like a comment to you all that eases or might ease those inflationary concerns? Yeah, right? It does. So that was all some of the comments today that I had gathered that where the market behind the scenes, even though the headlines, if you go read Forex Factory, you go read whatever fundamental reports are out there, they're all like, oh, all the Fed members were hawkish today, and one Fed member was for rate cuts. That's not good. But in reality, fuck them. They're not the Fed chair. What the Fed chair says is what the market pays attention to, right? On days that it's the FOMC meeting. So Jerome Powell came in leaning more dovish, right? I'd say that he actually leaned more dovish or neutral compared to his previous hawkish rhetoric that he's delivered in past FOMCs this year. Okay. So I wanted to make sure that we highlight that. His repeated emphasis that the economy remains resilient, consumer spending is holding up fairly well, labor markets are only softening modestly, and no significant slowdown has emerged yet from higher gasoline prices, all helped reinforce the soft landing narrative rather than challenging it. At the same time, remarks that the committee is moving toward a more neutral place, that policy is within reasonable neutral ranges, and that the Fed would signal if cuts were needed, gave investors more confidence that the central bank is not trying to over-tighten into weakness. Even where Powell stayed cautious, markets appeared to take reassurance. His acknowledgments that tariff-driven inflation may ease this year, combined with the point that no one is currently advocating rate hikes, helped temper fears of fresh hawkish turns. Yes, he did note that they are prepared to tighten if needed, but more importantly, that was framed as a conditional risk management rather than a base case intention. For markets hypersensitive to policy mistakes, that distinction matters. It keeps alive the view that the Fed may remain flexible enough to respond to slowing conditions without crushing growth. That helps explain why the Nasdaq and crypto have, at least for now, been able to hold onto gains, despite oil remaining elevated. Higher crude oil typically raises inflation concerns and can pressure risk sentiment. Yet markets have been willing to look through some of that because Powell did not validate the stagflation narrative. He literally said in his comment that we see oil prices coming down and inflation easing this year, right? So why would he say that? I don't know. I would say if I was a market maker and I heard that, I'd be like, well, he must know something we don't. So let's start to price that in, right? So that way, when the news finally comes out that inflation has dropped later on in a month or two from now, the market makers can dump on all of us uneducated retail investors that buy the top, right? Not here in this community, but you kind of catch my drift, right? That's how the markets work. Yet markets have been willing to look through some of that because Powell did not validate a stagflation narrative. Instead, he reinforced growth resilience while keeping policy optionality open. That tends to support multiples, especially in growth-heavy indexes like the Nasdaq. That backdrop also intersected with one of the most important earnings sessions of the quarter. Wednesday was arguably the biggest single day for the big tech earnings, with four members of the Magnificent Seven, Alphabet, Amazon, Meta, and Microsoft, all reporting after the bell. Somebody had asked in the Discord, how do you see these earnings reports come out? You can go to any like major conglomerate news fundamental website and they should report their earnings. They might lag a little bit, but we can't usually trade during the time that they come out anyways because the markets are closed, especially if you're on a prop firm. So it doesn't matter anyways. But you can go to like Yahoo Finance. That's where I've gone in the past. I personally go to this website here, Investopedia. They usually drop them, a couple minutes after the earnings reports come out. CNBC, Fox News, Reuters, pretty much anywhere. You can just type in earnings reports today and you'll see headlines when they come out, right? All right, so back to this. Not only did all four beat top and bottom line expectations, which remember we had mentioned that we need to see that happen, but investors were focused on something even more consequential, the forward guidance, enterprise trends, and the pace of AI investment. Markets have increasingly viewed the AI infrastructure spending as a major pillar supporting growth expectations, productivity, optimism, and ultimately premium valuations in US tech. That all four delivered beats while Amazon and Alphabet, touched record highs, added another layer of support for sentiment. So Amazon today, phenomenal earnings reports. They reached record highs. Alphabet, I'm not too familiar with the company in detail, but of course it's a big tech conglomerate. And they touched record highs as well. This matters way beyond just earnings headlines. When mega cap leaders continue to validate revenue growth, remember, just like Jerome Powell said, the economy is doing well. Well, if organizations can confirm that growth is happening within the organization while also still investing in further AI buildouts, it helps reinforce the broader growth narrative without a collapse. Without the collapse narrative that risk assets have been leaning on. All right. So in many ways, earnings helped offset some of the caution embedded in the Fed split and the geopolitical headlines. On the geopolitical front, of course, that remains right now probably one of the major swings factors underneath the surface because who knows how that could freaking unfold, and the market's super sensitive on any headline surrounding that. The Middle East right now remains a live variable, particularly around Iran, the Strait of Hormuz, and oil. President Trump's latest comments introduced both tension and paradoxically a degree of market hope. So this is what I was talking about, how right now we are like in this war of misinformation, but real information if you know how to peek behind the surface. Because somebody reading this today, especially on NASDAQ as an example, would have likely just sold this headline. Like, oh my gosh, Trump holding a gun. This is crazy. They can't get their act together. This is not good, right? They better get their act together soon or else, right? They would take this as a threat. But if you actually read an article on his rhetoric behind this post, it was actually supportive of risk on sentiment. So I said here, his rhetoric toward Tehran was aggressive, including threats and rejection of Iran's proposal tied to the reopening of Hamas in exchange for lifting the U.S. blockade. His comments that the blockade remains more effective than bombing and his rejection of rushing into a broader agreement keeps the geopolitical risk premium alive. But markets also seem to be reading an important subtext. Despite harsh rhetoric and continued pressure, there remains no immediate return to open military escalation for now. And that is where I found this little tiny, oh, that's actually supportive of risk sentiment. It says right here, the US president has been emphasizing that he is comfortable with the status quo with Iran for now, right? That's a good thing. Even though Iran has been saying no to their proposals, president's like, okay, we can calmly continue to keep negotiating, but I'm not unlocking the blockade, da 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 da, right? But it says here, suggesting that he is in no rush to push for a comprehensive agreement or return to the fighting. That to me, no return to fighting, right there in a nutshell, is vocabulary enough to support risk sentiment underneath the surface. So that's why I try to dig through these reports for you guys, because it's not just about the headline, it's about how the market perceives the headline. Okay. The distinction, I don't know write that shit down. It's not about the headline. It is about how the markets perceive the headline. Damn, that shit called me off guard. Sometimes I get philosophical. That was a good one. It's not about the headline. It's about how the market perceives the headline. The distinction may be helping preserve some optimism. The fact that Trump has emphasized comfort with the status quo rather than urgency to resume direct fighting appears, at least for now, to have kept markets from pricing a more severe disruption scenario. In other words, tensions remain, but worst case escalations have not yet become the dominant market assumption. That matters enormously because oil is still one of the clearest transmission channels into the inflation expectations. If the Iran conflict worsens or Hamas risks rise materially, oil could become a direct threat to the soft landing narrative that we saw Jerome Powell carry on today. That is exactly why the market is balancing between optimism and caution rather than embracing outright euphoria. So I'm not sitting here saying that we're going to continue to go higher. It's possible if this current rhetoric continues, but we need to be very cautious, teeter-tottering between over-optimism and understanding that we could see a massive correction if one thing breaks, right? If one thing sours the current sentiment. So that leads us into tomorrow. Tomorrow's focus is going to be on GDP, labor data, and core PCE. Primary scheduled data, of course, and then outside of that, the headline risks surrounding Iran, of course, any tariff-related escalations. We'll keep the Bank of Japan for now in the background on the backdrop and the Greenland debacle as well. Also, the transition between the Fed chair and whatnot, we'll see how that kind of rolls out over the coming weeks. But just again, all headlines that we also need to be mindful of outside of the scheduled data. All of them are going to be arriving at the same moment where markets are going to be trying to determine whether today's optimism has a real macro support behind it. If inflation, so I put the scenario in blue for you guys to kind of color code the mindset behind it, because this would likely result in a bullish environment tomorrow for risk sentiment. If inflation shows further cooling, or at a minimum avoids reacceleration, while labor market data softens in such a way that it signals moderation rather than recessionary risks, why do we not want to see recessionary risks tomorrow? Like if tomorrow, okay, considering what Jerome Powell said today, if tomorrow the labor market data comes out and shows, I'm just going to throw out some crazy ass number to give you guys a perspective. If the unemployment claims comes out tomorrow at 250,000 unemployment claims, and the previous reading was at 203,000, that's a what? That's a 47,000 increase in the unemployment claims. Does that look like the labor market is as resilient as Jerome Powell mentioned today? Or that the economy is doing as well as Jerome Powell perceived it today? No, to the market, they'd probably be like, a little sketchy there. Why did this labor market report come out so downbeat? Same thing with the GDP. You're going to expect that if Jerome Powell said that the economy is performing well today, that the GDP tomorrow is going to perform well. If it doesn't, and it completely goes way under what the market was expecting, what the market was forecasting, and way under what the previous was, and actually shows a downbeat GDP figure, then that could sour sentiment, could sour the future growth outlook, and therefore, again, retrace sentiment. So we need to ideally see, to finish reading this, labor market figures that show signals of moderation rather than recessionary risks that could reinforce Powell's narrative and allow the current risk-on tone to continue. Pair that, of course, with de-escalation headlines from the Middle East, and markets could interpret it as confirmation that growth is holding while inflation pressures will likely gradually ease in the future. That would be supportive not only for NASDAQ, but also for crypto, which has been increasingly sensitive to the same liquidity and growth expectations driving broader risk sentiment. But the risks to that view are, of course, not clear. If labor market data comes in too strong, if inflation surprises higher, oil pushes further on geopolitical escalation and tensions, or the Middle East tensions intensify around Hamas or the blockade, sentiment could, of course, quickly sour. In that scenario, the current optimism would likely be challenged by renewed fears that sticky inflation will force the Fed back to a more restrictive posture, just as the geopolitical risk raises macro fragility. And we have to remember what Jerome Powell said today, that yes, rate hikes are off the table, but they are prepared to hike rates if the environment presents itself, right? So that is why even with NASDAQ holding above the 27,350 dark pool, crypto holding its overall gains, hovering around 2.5 to 2.6 trillion at time of recording, and earnings helping stabilize sentiment, markets still feel very much on edge, waiting for the next catalyst rather than fully convinced that the path higher is clear. For now, though, the takeaway into Asia session is that buyers are, of course, still defending risk. The Fed did not deliver a shock. Powell did not sound overly hawkish. Big tech did reinforce growth optimism. Geopolitical risks remain contained for now, at least enough to not derail sentiment. And until incoming data or headlines materially challenge the current thesis today, that balance markets will likely be willing to keep leaning into the soft landing narrative and carefully continue its trail upwards. So just be mindful of that. Until we see a full-on sentiment shift, we have to continue to ride this bullish narrative, right? Don't just continue to think for 1 second that because Nasdaq is trading at all-time highs, that it's just going to dump and give you some life-changing sell opportunity. Okay, it could, but don't bet on it. Don't just go and risk or blow your whole entire portfolio or account that you're trading on taking that opportunity because you think it's going to happen. Coming in the days ahead, as especially as we roll into the new month, make sure that you guys are managing risk properly. Make sure that you guys are looking at taking the best setups that make sense and aren't emotionally biased or, forced. And just understand the current environment that we're operating in and how fragile it is and how quickly it could change on the drop of a dime. Okay. So with that being said, let's just really fast take a quick look at the total crypto market. First, we have now, since we've come up into the total $2.6 trillion market cap level, we have rejected, oops, we have rejected the $2.6 trillion threshold 3 times. So that to me is a clear indication. I don't know why that's not letting me change my, there we go. That to me is a clear indication that the passive seller that's sitting here that aggressively broke this area and trapped buyers before, as we can see with the buy volume candle, and then an aggressive push past support that shows passive sellers becoming aggressive and creating another leg to the downside. We have now pushed price back up into that area and seen the sellers likely sitting there defending this area 1, 2, 3 times. That means it is now up to these buyers at these local lows to defend their previous buy positions, trap sellers, and then show us their aggressive hand to possibly take price back up into $2.6 trillion. So as we start to inch down into these previous lows, if we do not start to see buyers defend and see this type of price action instantly or in a few days thereafter, where buyers completely engulf and consume sellers' volume, then we're likely going to see targets lower, where if this level does not defend, buyers will have attempt to defend at the next level. The last level underneath of that at around 2.3 to 2.4 trillion is going to be the 2.36 to 2.4 trillion is going to be the 2.3 trillion flat. That is my last line of defense for my bullish thesis, where if we break bearish beneath $2.3 trillion, that is a case for concern, especially if sellers start to aggressively show their hand, sentiment sours. That could open the door for a much deeper retracement back down into the 2.05 trillion flat. Long stretch away from that. For now, I firmly believe that the sentiment is still in favor of risk assets until I'm proven otherwise or the sentiment headlines change. I am noticing and paying attention that we're still in a very fragile environment. So although I am bullish, I'm cautiously optimistic. I'm not leaning on the bullish narrative. As a matter of fact, I would not be surprised if before market makers flood into crypto, we don't see one more flush out. But I'm also not denying the fact that this was a very substantial increase in terms of volume, activity in crypto, and sentiment coming back to the crypto space. But in order for it to continue bullish, we need to see the narrative continue to flourish. And if it does not, we have to accept that we're likely going to resolve in a correctionary period again, at least to some extent. All right. So to the upside, if we do break above $2.6 trillion, we need to turn that level into support. And then that would open the door for a possible sell squeeze, where if we do break bullish above 2.6 and we start to take out all the liquidity above these highs, it's probably going to result in a sell squeeze, and that could open the door for a higher push into our next target at 2.89 trillion. The downside levels still remain underneath of 2.05, where if we do have some formal crash or sentiment shift, that will open the door for the lower level beneath that at 1.84, which I don't believe have changed. I haven't checked the deltas and the dark pools for the total market cap, but I don't think they've changed. XRP. As always, just trying to bring you guys the realest updates in the game. I haven't seen anybody else on the internet with the more accurate updates than what we give here at this community. So I always try to give you guys timestamps. You can say I put this information out at the most recent local top. when XRP was trading right at around $1.40, taking this little handy dandy tool and copying the April 26th post that I gave to you guys on XRP about where price was trading at, how we were hovering at around a $1.43 dark pool for over a week, and that if risk sentiment continued, we would likely drop back down into $1.34 as the next area of interest for buyers to possibly defend and reclaim bullish momentum. And this is that analysis that I gave you guys. You can see now, fast forwarding to today, that second analysis came into fruition, which was failure to break above $1.43 for buyers to become aggressive and push higher. And that would likely result in a retest of the dark pool at $1.34, where you can see to the almost freaking pip we have come back down into and retested. Sellers started to take profit here. I wouldn't say that buyers are fully back in control yet. I would just assume that this is probably some profit taking from sellers that got in at these levels. So with that in mind, considering that now we have come into the $1.34 range, bullish scenario first. On XRP, I'm still overall bullish as long as we can hold above $1.27. We have recently broke above this previous high. And we have created a new structure high. Personally, right now, I believe that we're hovering in this A to B range, where buyers still have the opportunity to defend at these levels. They just recently gave up $1.40, so that level has now been taken. The question is do we start to see these buy bases hold? You can see that right now the next one is at $1.34. So if we can hold $1.34, sentiment can continue with its optimism and we can see bullish headlines or something that's going to drive inflows back into risk assets. Of course, the $1.43 and between $1.50 range is going to be our next bullish hurdle before we get excited about any higher prices. Underneath of $1.34, I still remain bullish as long as price can hold at that buy wall on the order flow that sits at about $1.27, which we have seen hold here. Buyers have defended it here. And so that would be the last line of defense. I'm telling you guys right now, this is the last line of defense for XRP. Because on the order flow, we have a buy wall here. And we can see without the order flow that this has been respected. This $1.27 range has now been respected twice. If it gets respected a third time, except instead of it getting respected and buyers becoming aggressive after trapping sellers, and we see sellers break this $1.27 threshold, imagine all the buy stops that are going to get triggered, the stop losses and all the liquidity that sits beneath this, and it's probably going to result in a buy squeeze, right? That's going to open the door for a drop down into $1.18 if we do see a $1.27 threshold fail to hold. So for now, I'm still bullish above $1.27. If we give way of that $1.27 range, it could get ugly. It could get ugly. I would go out right, and I'm just going to assume the worst case scenario is that if they're going to attack this low here and all the liquidity that sits here, I don't think that they're just going to let this one ride. And this one rides at $1.11. We know that there's lower level dark pools that Scalper has highlighted. The next one underneath of $1.11 doesn't come in until 91 cents, right? So be prepared for that. I'm throwing it on everybody's radar just in case, because I will be accumulating some XRP if we can break beneath $1 again. Outside of that, I think that that is all that I have in terms of the update for now. So right now, be cautious. Still bullish on NASDAQ, but be mindful at the drop of the dime on a shift of sentiment or change in headlines. We could see that pullback. Don't just think that that pullback is going to happen, right? Right now on the higher time frame, we're clearly holding bullish structure. We need to see a shift in structure on the higher time frame and a complete shift in sentiment on NASDAQ before we start taking sells to the point where we're like, we're going to wire this all the way back down to freaking, rock bottom. Not yet. Possible, but not yet. I still think that buyers are in control. On the higher time frame, we're clearly still holding bullish order flow. Right? So for now, cautiously optimistic. Cautiously optimistic across the board. So I hope that that breakdown helped you guys out. I hope that you guys enjoyed this fundamental report. I know that I was trying to get through it a little fast. I knew it was going to be a lengthy one. But always trying to keep you all on the loop with accurate information, keep you guys tapped in. We're part of a very smooth, we're part of a very small percentage of individuals that are actually locked into what's happening behind the scenes, what's driving market conditions. And I genuinely enjoy keeping you guys who are also interested in this journey with me in the loop with things that actually matter, right? Hits home to me that people actually give a fuck, that people actually care, you know? So I try to just bring the best information that could keep you guys in the loop with what's happening. I hope that this does it for you guys. With that being said, blessings to you all, and I will see you all tomorrow. Tomorrow's Thursday, so we'll probably have our last Zoom call tomorrow. You guys and gals take it easy.
Thank you, Seth.
No problem.
Thanks, bro. Thanks, bro.
You guys have a good one, okay? I'll drop this report in the chat so you guys can read it.
Yeah, big dog.
You guys have a good one.
Yeah, thank you.